Just digesting these numbers today, we know that inflation in the UK has been a headline act, the double-digit numbers this week. In the backdrop, there are a lot of pressures on households. How did these numbers look to you in that context?
Very strong. I mean, it's very unusual that we have a month where we get an upside surprise in inflation and an upside surprise in the volume of retail sales. Usually they go in opposite directions. But I think what this really shows is that UK households do have surplus savings that had been built up through the pandemic, and they're looking to go out and purchase those items or those services now before prices start shooting up.
If we read into the data, it does feel as though online did play a significant role here. And I wonder whether this is a new phase we're entering, that shopping around happens online with people not going into stores. But if they do see something, that is the means of executing this retail trade now. Is that something to consider as we go through a very tough environment?
We had a very big jump in the share of online sales through the pandemic. It went from about a quarter of all sales up to about a third. And since then, it's been coming back down towards its trend. No, I think it may have been more related with a certain very large online retailer having their big annual sale, because those dates tend to move around. The ONS can sometimes struggle with the seasonality of those sales.
Azad, in the U.S., we're seeing a very different impact across the income spectrum in terms of consumer sentiment and consumer spend. A lot of the retail giants this week confirmed this idea that it is the middle-income consumer being hit hardest by inflation trends. Is it a similar story in the U.K.?
It's hard to say. We don't have the same data, but there's clearly a lot of anxiety around the cost of living crisis, as it's dubbed here in the UK. We've had a bit of a delay in terms of the rise in energy prices because of this energy price cap that we have. So a lot of consumers won't really feel the pain properly until around Christmas or January time. And I think that's potentially why the US maybe is slightly ahead in its cycle than the UK.
That's fascinating and creates a very difficult environment for the Bank of England. If the price cap is obviously creating this artificial ceiling for energy prices, how do you think the Bank of England is dealing right now with inflation soaring to these levels? Is your sense that we're going to get some changes to the Bank of England's forecast, or do you think that they're going to hold up the ones that they just provided us with just several weeks ago?
The latest forecast that they put out just a couple of weeks ago for the monetary policy report really was ahead of the market in terms of inflation. A peak of around 14% is quite a bit above the consensus. So I don't think they need to change their forecast there as much. But they do have a very negative forecast on growth. And what these retail sales numbers are telling us is actually the momentum behind the economy is stronger than expected. And maybe they need to think about where that trade-off is between inflation and growth. Is it quite that bad? Or could it be that we end up with a stronger economy and potentially even more inflation and stickier inflation going into next year?